Hey everyone, it's Brady from over at American Mortgage Solutions. So I'm already getting a lot of questions and texts and emails about the 25 basis points interest rate cut the Fed did yesterday to the Fed funds rate. So here's how that affected mortgages. So yesterday, everything was good. The bond market, of course, the bond market is kind of what the 30-year fixed rates, all the fixed rates follow. You can use the 10-year Treasury to also monitor. They kind of work in inverse of each other. However, everything was pretty cool after the 25 cut until our lovely Fed Chairman Jerome Powell said these words right here, that the December rate cut, which there was already like a 90% chance that we're going to cut again by 25 basis points. He said in December it's not a foregone conclusion, and far from it, that they'll cut again in December. Well, the markets didn't like that. The stock market, the S&P, everything ran off. The bond market, and you can see right here on this chart, when we were hovering up here around 101.42 on this level of resistance, you can see we were here, we came down, rates got worse, then a little better, worse, and then we've been on a steady improvement of rates dropping. But when he said that yesterday, you see this big red candlestick right here, we ran all the way down. We lost 34 basis points yesterday in the bond market, which affects your fixed rate mortgages. Now, over time, this will correct itself. I think you can see this morning, when we opened up this morning, we were down 8 already this morning. And right now we're down 1, so it's improved. The 10-year, I'll flip over here to the 10-year. So with the 10-year, the yield on it drops, so do interest rates. They kind of follow each other. The bond market, which controls the rates, it works inverse. Is the yield goes up on the bonds, the mortgage rates drop, the fixed rates do. But you can see what happened to the 10-year yesterday. It went straight up. So as this goes up, rates go up. Now we've got some levels of resistance, so it's already hit that and it's bounced back down. So hopefully not too much damage from Jerome Powell's comments yesterday. So just hang tight. Mortgage rates are actually going to tick up a little bit today, but I think long term they're going to continue the trend of moving lower. Of course, if you have any questions and you want a customized scenario for your situation, send me an email, call me, and we'll take a look at your own individual situation and see if it makes sense to refinance. If you're buying, rates are still good. 30-year fixed are still around 6.375 to 6, or 6.25 to 6.5, depending on the whole scenario, loan to value, credit scores, and such. 15-year is down in the 5.5 range, maybe 5.5 to 5.75. Again, depends on what you're looking at, what the loan to value is, the loan amount. A lot of things are going at. But again, for a customized look at your own individual situation, just reach out to us anytime. Hope this helps. You guys have a great day, and you reach me at 502-655-0106 anytime, or you can email me at brady@loansolutionsnow.com. Thanks. Talk to you soon.